Welcome back. This is an update on the trading video idea I just made in a few minutes ago. So, I just bought this trade right here. I know I had this analysis that was like, okay, I'm waiting for this trade to break below this level, and I'm going to sell it back to this zone. But then I made some changes to the trade idea. I made the changes because I remembered I'm still on an uptrend. If you can see right here, we are still on an uptrend. We have been bullish for a very, very long time. You can see, so it's not good to counter trend. It's not good at all. So it's better and safer to be on the majority side or the liquidity side, where most of the majority big market movers are on. So we're still bullish on XAU USD. So that's why I bought once we detested this zone right there. And let me testify the change in analysis and why I did so. We have this particular. I have this particular, what do you call it, website. It's called Co Chatting. It's really good for backtesting, where you can actually live uh, replay the market and see what you're looking at, or how your strategy confirms and plays with the market. So, in a short version, let me show you how it really works, how my strategy really works. We have these levels marked right there. I didn't mark this level. Okay, the only levels that I marked prior to replaying the market are 1, 2, 3, 4. So once we mark these levels, these are major levels. These are levels where I've seen the market turn on the H4. So we have this, and that. So once the market got to this point, it sold back to this level. If you had to buy, you would have bought at this point, but then got stopped out. You should also have bought at this point, but then got stopped out. Then you would have bought at this level, which gets you back to this point. Once you get back above this level, you should have bought again, and then back to this level, bought again. Look to take profit at this particular point. So instead, when I started my replay, I started at this point. So I bought at this point, got back to this point, took profits. Again, before considering the fact that I need to ensure that if it's buying, I do not sell. One of the examples I sold is this one. They say sold, got stopped out. But then I bought once the market got back to this zone and got taken out with a TP at this particular point. And then now once the market got back here, I should have bought at this particular point. Once we broke, I could have bought again, but maybe if I bought right here again, I would have gotten stopped out. Oh, and then there's another rule I've made about above here. I'll show you why I made it. Three stopping outs on a level, and I should wait for that level to be broken completely and start buying on the level above. Let me show you why I did so. So we have this. I got stopped out at this point. I should have gotten stopped out, but I didn't get in. Until then, I still haven't moved the strategy. So we got back in right here. We got stopped out. We got back to this level again. We should have bought, but we didn't. Instead, I bought at this point. Once we broke above this level, I bought it, and then back to this. Oh, I should not have moved that. Then we move it back. Then I got stopped at this point with a TP where I had already added another trade. And then there is this trade. I got in, got stopped out at this point. I had trade my stops. The same thing as this one. I got in right there. Broke above this level. I got in again. And broke above. Okay, I waited for the red candle to form. And then I put a level right there. Once we broke this level again, I bought and got stopped out at that point. We got back to the level. I waited for the chart to form some red candles, and once we got this green candle at there, like after this huge sell-off, I put a level right there, and guess what happened? The market touched that level and continued to buy. So you had to wait. So once I got here, I got stopped out again. Should according to my strategy, I should have got in at this particular point. I need to put that. I need not to lie to myself. So I should have gotten stopped out at that point. So I got in again once we got above that level, and we got back up. I was waiting for the break of this level, but we did not, so I got stopped at that point. So again, once the market broke that level, I got back in. So this is where I was talking about you changing the rules. You change the rules to ensure that you get such things in order. Let's say you add your stop loss, then you would not have gotten stopped out by this particular trade, and you would not have lost that 1%. But then what does that do to your risk to reward ratios? It drops them. So you always need to look at, okay, trading is not just about clicking buy or sell. It's about realizing that it's a game of probability, and you have to ensure that uh, if you have to have an edge. Like for example, this is an edge, and not only that, you need to optimize your trading strategy, and you need to follow the rules to the letter. Okay, so that's why I've stuck with the 100 pips stop loss. Yes, I could have not got stopped out at this point, and maybe we could have eaten all this. But then, what does that do to my risk to reward ratio? Okay, so that's why I'll always get in once we get back. So I got this trade right there all the way back up. We broke this level once we formed this red. I put a level right there. We broke above it. I got in. I got stopped out. So this trade and this trade got stopped out at the same time. So we got in again once we broke that level, and we were continuing to push up. Once we made this red, I put another level right there. And once, sure enough, once it got broken, I got in at this particular point. But then the market didn't just continue. We were waiting for this level to be broken so that we can bring our stop losses up above there. We are not dragging our stop losses just by dragging them. We are dragging them because there's a level of structure that has formed. And once that structure is broken, then we bring our stop losses above. So once this got stopped out, I waited for this level, for this market to get back to this level. I bought again. Once we broke this level again, I bought again, but then got stopped out. So these are one, two, three stops out. Okay, we consider this all these as stops out as much as they had profit on them. So those are three stops out. So we should wait for the market to get back to this zone right there so that we can buy again, or back to this level over there. So let's see what the market does. Maybe I can take about 2 or 3 trades before this gets to 20 minutes. Let's see what happens. So we're still feeling good. But then another thing you need to know, you should not, once you're looking at the H4, you should not look at the market before H4 is closed. Okay? Looking at the market, when you're staying in the market, you are easily getting manipulated by price. Price moves up and down at any one point. So every single point, you stay on the market, looking at it every single time. Yes, you might be a trade trader or a weekly trader, but every single time you're looking at the market, you the market compels you to take an action. And trust you me, that action is usually not a good action. There's another rule I have, like the lesser you are in on a trade, the lesser time you're in on the market, the more money you keep. Okay, maybe once you do this, you'll understand. Okay, now let's continue and see what happened. We haven't broken yet. We waited for the level to be broken or it to retest this level again so that we can buy. So let's see what happens. Looks like we're about to retest it. So at this particular point, you would have a pending order for such a scenario. See, you should have a pending order at this particular point. So let's see what happens. At any one point that we get triggered in, or we break this level right here. So that's what we're waiting for. And you can find actually the market stays at this point for a very long time, and it's okay. Hey, it's okay when you don't make a trade. It's okay. When you stay liquid, it's like you ensuring that, oh, we got triggered in and we got stopped out. It's okay. That's what the market does. So until the market gets back to this level and we can buy again, we can do nothing about it. We can't sell. Remember that. We're still on a bullish market until we get a signal that we can sell. We are now on this on a bearish market. We can't buy, and I'm still formulating rules on how I should know that now we're on a downtrend. But yeah, I'll let you know when that happens. Let's see. Good. We got back to this level right here, and looks like we formed a high, so that's good. So we can have another trade right there. Once we get stopped out, it's okay. That's why you always have to, uh, you know, have those trades that you trail your stops so much that it makes some good money. You know, to counteract the particular days that you won't make money. So our TP should be above this level right there. This is good. This is a huge discount, guys. This is a very huge discount. It's 1:5. That's good. So let's see. Did we get stocked up? Is this? Yeah, no, not yet. We haven't got stocked up because the TPs are right there. But it came really close to stopping us out. See, we didn't get stopped up. We are still looking good. But then I told you the market does what it wants. So looks like we are pushing up. We wait until that. Oh, good. Now we are back at this level. So, has it been broken yet? Nope. We're still waiting. Hasn't been broken yet. The market had a gap right there. Not broken yet. Not broken yet. Looks like now we're going back. Now we have broken it. Right there. You can see it has been broken. So what we are looking for is another buy. You put another buy right there. Let's see if we do get triggered in. Okay. Yes, and we got triggered in. Our stops should be at 100 pips so that we can know if we get stopped up. 100 pips is about right there. Okay, let's see what happens. Boom. The market still goes on. Our TPs should be right about there. So once we get there, we can still continue pushing it up and see, okay, now we about to break this level. We actually did. So let's continue running it. This is why I'm telling you, like, you have to have these huge trades which can run for a very long time, because this tends to pay up lots of losses if you had them. Okay, so we're going to enter another trade at this point. We put our stop losses. So if we do get stopped out at 100 pips, if we get stopped out, all these trades will get stopped out at this point. Because once you enter here, you bring all your stop losses at this point. Okay. Now let's see what happens. We got in, as you can see, we got triggered and we got stopped out. Okay. We got stopped out, guys. We got stopped out at this particular point. So it's okay. It's okay. But then we got back in at this particular point and we enter on another trade. It's funny. It's funny that you got to do all these entries and stops, and but then that's the whole entire strategy. So we got stopped out at that point and we got stopped out at that point. So these trades took about 4.5, 4.35, 0.69, and a loss of 1. So that gives you about 3 point something. It's alright. It's alright, my boys. Okay, let's continue. We got back into the level again and retested it. So we got tapped in again. Let's see what's happening. You haven't put down stop losses at the correct point. That's fine. And you need to realize that what I say. You remember what I said? Like, you have to have 3 stop losses and you're out. Okay. You can also have this particular rule that once the market gets back to this level, back to a very huge and standard level, you get out, like fully get out. But since those are the things that I'm talking about, like optimizing your trading strategy. I have to ensure that this is not above 20, because if it gets to 20 minutes, the trade idea gets cancelled at once. So yeah, that's why I'm getting back to the trading view platform. Okay, now let's see what happens. We haven't got stopped out yet, and boom, we're still continuing to push up. So we wait until we see a red candle where we can actually put our next level. But okay, we're still pushing up. We are still pushing up. Boom, you have a red candle right there. So once you have your red candle right there on H4, you establish that now is another level. Yeah, let's wait and see what happens. We haven't broken it. Yes, now we have broken it. So we're looking for a trade, or we shall look to enter at this particular point. If you don't get triggered, it's okay. The thing is, you also have brought the stop loss of this particular trade back down to this level. Okay, so we put our stop losses at 100 pips, and let's see how this goes. Looks like we're still pushing up, and we have another red candle, guys, right there. So this is another red one according to the strategy right there, and we broke it. We broke above that level, so we look to enter yet on another trade. Put the 100 pip stop. So if this trade gets stopped out, we all get stopped. They all get stopped out at this particular point. Yeah, see what I mean? Let's continue. Let's see if we get triggered, because it hasn't got triggered yet. And looks like we got triggered. If you can actually see, there is a wick over there. We got triggered, and looks like you're going to continue with the push up. Now, this is what, when this happens, you're gonna eat well. No, like you be, oh my god, you be on top of the world. Okay, and we have another. Okay, we haven't got stopped out yet, if you can see, and we have another level right there. And what we're looking at is if we break above this level, we, you know, we enter another trade, and we haven't got stopped out. Oh my god, it really came close to stopping out. Can you see that? Really close to getting stopped out, and about to break this level. Once you break this level, it, oh goodness, this is awesome, boys. This is awesome. So now the stops again are going to be pulled up back above that level, and we are looking to enter on another yet on another trade. Remember, guys, we are risking the same amount every time. So 100 pips again. That's where the stops are. The stops are. And remember, all these trades are going to be stopped out at this particular point right there. If the trade gets stopped out, we all get stopped out at that point. Okay. Let's see what happens. Let's see if we get triggered. We didn't get triggered, so it's okay. Yes, we got triggered in, guys, and it's still pushing up. And guess what? We have another red candle right there. So we have our level right there. And actually, it broke above that level, if you can see. Okay, so we then again have another trade right there. Put our stops about 100 pips from that point. It's actually on the break even of this level. So if we do get stopped out, all these trades now will get stopped out at this level. Oh man, I like this trade. I really like this trade. Okay, now let's see what happens next. Okay, let's see what happens next. So if this trade will get stopped at our break even, it's all right. Let's see. Oh, we almost got tapped in, but we are not yet tapped in. It's all right. We got tapped in. See that? Okay, let's see if we get stopped out. And we got stopped out. That's awesome. So you see now the importance of bringing your stop losses above here. If you had not brought your stop loss about here, you would have gotten stopped out at this trade, and almost at this trade. See? Okay, and the another thing about adding on to your positions is that all these positions are in, and you'll see how much that can actually change your results. Okay, and looks like that's a wrap. I don't want this to get to, oh my goodness, it's topping. So yeah, good. and that's really really nice. About to stop, so see you in